Today I wanted to go over the RSU method to enter a short or a long trade. And the RSU method uses the RSI 14, and you enter a short when you're coming off of overbought, and you enter a long when you're coming off of oversold. Now, this is not a standalone method. This is a entry method. So you need an underlying reason as to why you want to go long or short something, typically on the higher time frame. So let's start with an example today, Occidental Petroleum, OXY. So if I add a 2-period RSI to this daily chart, you'll notice that we closed yesterday at 96.72. So anytime you close above 95 and have a gap up, that is typically a situation in which you can look for a short-term reason to short. And the general target for it would be the average of last 2 days close. So that would be 47.75, 56.45 divided by 2. Your target would be about 52.10. Looks like we got to 52.41. The day's not over, and also targets are just targets. Doesn't have to be exact. So let's say you did your homework on Friday and you realized that Oxy was very oversold. Then you saw the action in crude where we tagged $130 on the reopen and started coming off. And you get the feeling that, okay, this is probably a little stretched at the moment. Well, then you drop it down to a 5-minute, and we don't need this 2-period anymore. We look at the 14-period. And this is today's opening bar, and we're looking for bars where the RSI 14 crosses from above 70 to below 70. So that would be this bar here. We need a subsequent close below the low of that bar to confirm it. Otherwise, it could even be used as a buy scalp, with the stop below there. But in general, you weren't looking to go on the long side of this stock. So, stay focused on your higher time frame trade of wanting to be short this stock and wait till you get the right signal. So again, here we're above 70, above 70. This is our first bar below 70, and the low of that bar is 57.82. The very next bar closes at 57.76, so we get a close below the low of that bar. And your stop goes one tick above the high of the entry bar. So we're talking about 57.76, and your stop is 58.36, exactly 60 cents. And our target is technically down here at about 52.10. But with a 60-cent risk, you can't be faulted for taking profits anywhere along the way here. And again, our goal is to frame things up. We don't want to catch the exact high. We want to catch the point from which we are confident it's not going to go back. So you don't take any heat. If you shorted 57.76, the next bar's high was 57.75. This bar's high was 57.78. You took 2 cents of heat into your stop zone before getting, this looks like well over 8R. Let's see, 60 cents times 8 would be $4.80, 53.76. No, I'm sorry. 57.76 minus 480 is 52.96. Yeah, so another way you could have easily exited would have been to take some off at 4R, take some off at 8R. And, again, what does it matter if the S&P is going up or down, or gold is going up or down, if you can focus in on one security that has a good high time frame reason for getting in, and then hone your entry so precisely that you can make 8 times your money in a few hours. You have to start remembering that the game is not about what the commodity is, what the security is. When you're trading, the game is about making big multiples on risk of your money. This is not investing. Obviously, this is trading. Wanted to do another example. Bed Bath & Beyond gapped up ridiculously today. Gapped all the way up to this resistance level. So looking at how extreme that gap was, and given that this is a fast moving stock, we can use the 1 minute chart. Let's say, you figured, hey, I want to short this somewhere. You could have shorted it off the open, you could have shorted it off a 1 minute break. There's lots of ways you could do it, but if you did it with the RSU method, you waited for this bar, which is the first bar that crossed from above 70 to below 70, and then the very next bar closed below the low of that bar. So that means 26.55 is where you shorted, and your stop was 27.77. So that's a risk of about $1.22. And let's see, it went all the way down to 2022. So 2022 minus 26.55 divided by 122, you made about 5 times your risk shorting here down to here. And again, if you look at one of our goals, the reason we chose to short there instead of right off the open, which was a better entry price, is that we're confident with this method that we're not going to have a lot of heat. I'm not going to have to take a lot of heat. So here you would have taken a little bit of heat up to 27.02 from 26.55, about almost 50 cents of heat. And also, let's just do the calculation. Let's say, you had the foresight to know that this was going to go straight down. So you just waited for the break of the 1 minute bar with stop above the high of the 1 minute bar. Well, this 1 minute bar is $1.31. Okay, so it's not that much bigger than this, so you probably would have gotten the same R outcome, maybe even one more R using it. But that's something to consider when you're looking at things. Your goal isn't always to get the highest price. The goal is to get the tightest risk with the highest chance that you're not going to go back and run over your stop. Now, let's look at the long side of this. After this had a nice big down move, let's see how we could have played this to the long side. And over here, it popped its head above from RSI 14 below 30 to above 30, and then rolled over. Popped its head up again right here on this green bar. And let's blow these up so you can see them. Rolled over, right? No confirmation. Rolled over, no confirmation. And then here, popped its head above here, and it got confirmation here. So you were able to enter 22.46 with a 22.12, or say one tick below, 24.11 stop. About a 35-cent stop. And then let's see, you got up to 23.43, 22.46, 97 cents. So, 97 divided by whatever this was, 46 minus 11.35, less than 3R. So you got 2R here. So in any which way, if you were trailing, if you took some off along the way, or like usually what I would do is at 2R, I would move my stop to break even. So then this would roll over and stop me out at break even. But let's keep going down the chart. And here we had another setup bar without confirmation. Here we had another setup bar. The high of this bar is 21.27. This closes 21.25. You can see that closes below, no confirmation, roll over again. Now here we got confirmation again. We got a close above that, and then a close immediately above the high. And you might also notice that this was a hoagie right here. 1, 2, 3, 4, 5, 6, 7, 8 minutes inside that range. So either that hoagie could have been your entry reason, the RSU at this point where this is the trigger bar and this is the confirmation bar. Here you would have bought in at 2050 with the stop at 2024. 2050 minus 2024, 26 cents. And then if you look at the size of the move that ensued from there, let's rectangle off our hoagie. Oh, we're making new lows again, okay. But in the meantime, got as high as 22.22. 22.22 minus 2050 divided by 26 cents, 6.6 R between here and here. So if you took off half at 4R, move your stop to break even, you know, depending on however you choose to trail this, this could have been a very profitable run right here. And let's keep going. Let's see if there were any more long entries. So, okay, I guess this was technically a short entry because this bar went from above 70 to below 70, and then within 2 bars, let's see, this close is 63, this low is 64. So you did get confirmation not on the immediate next bar, but on one more bar forward, and you know that's okay as well. You don't want it to be too many bars, but one extra bar is okay. And that could have set up a short, and you know, just eyeballing it looks like we're closing in on 2R of that short. I wouldn't like it as much just because it's you know, it seems pretty wide compared to the other bars. And then if we go down here, that did not get below 30. This got below 30. And here, this looks like a fake out. It's always good to look at times when your system fails as well. Here we had this right up here, and then 1 bar, 2 bars hence, we got confirmation that it went higher. 2062 minus 2049. Oh, that's very tight. That's about 14 cents of risk. So 2062 to 2089. Yeah, it's only 1, probably not even 2R. So anyway, this is just a very mechanical way to enter on a lower time frame when you have a higher time frame that you believe in, you know, that you want to go in the direction of. So for example, you know, here is a long-term chart of Netflix, a weekly chart. If for whatever reason you believe in the fundamentals, you believe in you know, the leaders of that company, you like the fact that Ackman bought a large stake, Reed Hastings started buying for the first time since the IPO. Technically, you like the idea of coming down into support of this triangle, you know, lots, whatever your reasons may be. The safest way to wait for this would be, okay, so here we got to move from below 30 to above 30 on this big green bar, but no confirmation. And now we're below 30, and you know, this could just dribble down to nothing. So if you were to wait until you had 1 bar that went from below 30 to above 30, and then another bar closing above that bar, that gives you a better chance. Now you have a fixed stop to trade it against, and it gives you a better chance of knowing that the tide has turned and that you're not going to just get run over. You know, of course, the flip side to that is, you know, it could give you a setup bar, and then it could spike up $100 and $200, you know, on earnings or on anything, and then you know, your risk return characteristics don't look as great. But again, I would say our goal is not that we have to own Netflix or that we have to be in a certain something. Our goal is just to make money, and we're looking for the highest return to risk setups that allow that, somewhat agnostic to what the actual vehicle is. So anyway, I hope this helps explain the RSU setup, and I'll also link the crude 9R trade from a while back, because that is also an RSU sell pattern. So you know, the more repetition you have with these patterns, the easier it becomes. If you like this content, please drop me a like, start subscribing, leave me a comment. If you don't like this video, I'd say stop watching it, but no, you're free to comment also. Thank you.